Good morning, everyone. Welcome to the TradeStation Masterclass. Today is an EasyLanguage class, and we're going to create, as the title says, adaptable strategies that adjust to changing market conditions. And we're going to do that in EasyLanguage. So this is a programming class. We're going to get our hands on the EasyLanguage editor and write some custom code. So it is kind of an advanced class. So this is your first time attending the TradeStation Masterclass. If it's a little bit overwhelming, don't worry. We all have to go through this learning curve, but learning a little bit of EasyLanguage can take your technical analysis and strategy trading to the next level. And that's the idea here, for you to be able to customize and turn your trading ideas into something that TradeStation can understand and follow. All right. So we're going to get started in just a moment. But before we do, let's go through some introductions and disclosures. My name is Jesus Nava. I'm the Director of Client Training and Education for TradeStation Securities. For me, it's always a pleasure to be here and talk about TradeStation. I'm not an expert programmer, but I do like EasyLanguage, and I do like to take on challenges and be able to display indicators on charts. So let's go through the disclosures here. Keep in mind that every symbol and idea that I talk about is for educational purposes only. These are not recommendations of TradeStation. Also, active trading is not suitable for everyone, and past historical performance is no guarantee of future results. For additional information, visit www.tradestation.com/important-information. Welcome to class. Let's go through the content of this presentation. We usually call this element of EasyLanguage switches and flags that you can create in your EasyLanguage. These switches and flags work inside your code to determine, what the strategy or the indicator should do. So you have multiple behaviors inside of the program, and depending on what's happening to the markets, then the indicator or the strategy will take certain action, and based on those flags or those switches. So that's the idea of today's class. We're going to start with an input switch, something to turn on or off a particular feature on your program. An input default value are generally set to a value greater than 0 as part of the study calculation process. You can create logic rules for when the trader sets an input value to 0 or -1. Then your code can test for those values and turn on or off functionality or code blocks. So this is an interesting concept where if you put in your action within an if-then statement, meaning that you have this switch that says, if my value is greater than 0, then take this action. You can see that we've put stop loss amount as an input. If you're familiar with inputs on the TradeStation studies, you know that you have to go to inputs to supply a value. So the intention of this indicator or strategy, in this case, the intention of this strategy is for the user to supply what they want their stop loss to be. And of course, it's going to be a specific number. In this case, you can see 200 in there. But notice that inside the text or the program or the syntax where we are generating the stop loss, this is included in an if-then statement. If stop loss amount is greater than 0, then set stop loss. A lot of times, we want to play around with certain functionality and have the ability to turn things on and off. For example, if you put in a stop loss, just to see if it improves your strategy performance, it'd be great for you to turn that feature on and off very quickly. So this is a perfect way to do that, so that if you have a 0, you can enter a 0 in any of an input, then it shuts off that particular feature. So in this case, if we were to put in a 0 right here in the inputs, it would not go inside of this if-then statement, so a stop would not be generated. So that's the type of switches and flags that we are going to be seeing in today's presentation. Inputs can also be used to create calculation modes to swap out active blocks of code to create more flexibility in your indicators and strategies. In this example, you can see that we have moving averages. Now, it's interesting that this indicator that we have an example for, it's calculating three different types of moving averages. We have the simple moving average, we have an exponential moving average, and we have a weighted moving average, all in one indicator. And very easily, you can enter for the average mode, you can enter a 1, a 2, or a 3 in order to change the way that the moving average is calculated. Many times when we're looking at a strategy, we sometimes wonder what the effect would be on our performance results, switching the calculation of a moving average from simple to exponential or weighted. So rather than having to go inside the program and change that, you can create these simple switches that look at a number and determines, what type of moving average you should use. This is also great if you wanted to backtest and optimize the results of a strategy, because who's to tell that a moving or an exponential moving average is better than a simple moving average, or that a weighted moving average is better than an exponential moving average. That type of thing you can test by creating these type of switches, so that in the optimization process, it goes through different scenarios and determines what is optimal for the strategy and the security that you're looking at. So we're going to create this example, but as a strategy so that we can optimize. Okay, let's go ahead and take a look. But today we're going to write this a simple code and then turn it into a strategy. Let me go over here to my TradeStation and show you how this is done. Okay, so I'm looking at Microsoft. Let me turn this into a daily chart. Let's go here to the apps and open up EasyLanguage. Again, if this is the first time that you're looking at EasyLanguage, don't stress. This is just the way that we access built-in studies in TradeStation, because everything in TradeStation is written in EasyLanguage. So that's one of the nice things about knowing a little bit of EasyLanguage, that you can go inside the code and understand how it's structured. And not only that, but you can copy and paste from already existing indicators and create your own. All right, let me go ahead and close this one and start a new one. I'm going to click on the little drop down for new document, and I'm going to select indicator. I'm not sure if you're aware of this, but naming an indicator with a special character like @ or an exclamation mark allows you to have those indicators sorted to the top. If you see yourself creating a lot of custom studies, it's a good habit to do that, so that everything you create is grouped together rather than having to look for your studies if they're sorted in alphabetical order. Okay, so this will be moving, let's call this MOV AVG mode. And I did say that I was going to create a strategy, so let's go ahead and do that instead. I'm going to go ahead and click on cancel on this. I'm going to go back to the drop down and I'm going to click on strategy instead, because I want to walk you through this example where I can set up my strategy to use multiple types of moving average calculations and determine which one is best for my strategy. So let me go over here and put in the same name that I typed in for my indicator. This is going to be @MC moving average mode. Template is none. I'm going to click OK. And we do know that, let me go here to inputs. Inputs, we start the declaration statement. This is the way you start any indicator or any strategy in the EasyLanguage development environment. You need to declare what are the inputs that the user is going to have access to. And the inputs, in this case, AVG length, so that I can modify the length of the moving average. I'm going to start this off at 30. And then I'm going to do AVG mode. And this will be started at 1. And we're going to make a note here. A note is made by typing a set of forward slashes. You can already see that as soon as I typed in the 2 forward slashes, it turns green. because it allows me to make a note as to what is it that I'm thinking and how to modify this study. And what I'm going to do here, I'm going to remind myself what the numbers are for which type of moving average. For one, is going to be equal SMA. Now, 2 is going to be equal to an EMA. And 3 is going to be equal to an XMA. All right, for not an XMA, WMA, for a weighted moving average. So let's go ahead and calculate the 3 moving averages first. So MOV AVG is going to be my variable. This is going to hold the calculation of my moving averages, so I have to declare that as a variable. Let me go ahead and type in a variable declaration statement. MOV AVG is kind of a made-up word. A lot of times, you know, if in the inputs declaration and the variable declaration, these are words that as an indicator creator or a strategy creator, you're going to decide what are my words, what are the words that I want to use. And of course, these are custom words or personalized words that need to be declared. So this is my moving average word, and I'm gonna initialize this to a numeric variable. So the 0 inside parentheses just tells EasyLanguage that this is a numeric and it's going to hold a number. So moving average is going to be equal to the average of the close for AVG length. Now I'm going to type in all 3. I know that this is contradicting, but we are going to then refine it using if-then statements so that we can have a specific calculation based on what the mode is. So moving average can also be an X average. This is the function for an exponential moving average. And notice that it's the same syntax. You know, the functions for the average have 2 parameters. You have to tell the average what is it that you want to average and for how many periods, and then it creates the average for you. And the third one is going to be the W average, which is also a function. It's going to do the same thing. So let's go ahead and separate these because I want to make sure that they're only calculated if the average mode is a particular number. Okay, so I'm going to say if AVG mode equals 1, then moving average equals the average. I'm going to do the second one. If AVG mode equals 2, then moving average equals the exponential moving average. And the other one is if AVG mode equals 3, then moving average equals the weighted moving average. So simply put, what this is doing is it's going to look at the input. This is a user supplied value. We started off at 1. And based on what that number is, then it's going to go inside the code and calculate it accordingly based on our program. All right. And this is what we're going to do. Since this is a strategy, we're going to say if close crosses over moving average, then buy next bar at market. Very simple command. You know, if the closing price of the candlestick crosses over the moving average, then we buy next bar at market. We're going to do just the long side so that we don't complicate things. So this is a long side strategy, and we're going to do the selling side. If the close crosses under the moving average, then we're going to sell next bar at market. All right, simple calculation. If it goes above the moving average, it goes long. If it goes below the moving average, it sells. Okay, let's go ahead and verify this code. Verification, if you're not familiar, is just a process where the editor goes in here, looks at my syntax, and makes sure that there's no errors. a lot of the syntax error. If you're missing any punctuation, if you're missing any parameters for the functions, if you wrote something wrong, if you have mismatching spelling, those type of things are going to be caught by the verification process. Let me verify the code. Verification is successful. The verification compiles the strategy, and now it should exist on my TradeStation platform. Now, I can have a similar study, that does exactly the same calculation, but instead of generating, buy and sell orders, it just plots on the chart. And that way you can just plot the moving average line based on the calculation you're using, whether it is a simple, an exponential, or a weighted. Well, let me go over here to my TradeStation and put the strategy right here on the chart. I'm going to add the study first so that we can have a visual on when the closing prices crosses over and under. I'm just going to do a simple moving average first. Moving average, one line. Let me prompt for editing because I know that the inputs, I set them to 30. So this is averaging 30 daily bars. And I'm going to go here to studies and click on add strategy. And then go to the top where I have my at MC studies. And this is the moving average mode study that we created together. I'm going to click OK. And that's it. So let's see what's going on. I was just looking at what had happened here. I'm not sure if you see. Let me go ahead and increase the spacing and then move the charts here to the. Okay, so that's better. You can see that in this uptrend, the price activity dipped down and it crossed under or closed under the moving average. So this generated a selling transaction for the long trade that we had generated back here. But as soon as we had that dip under the moving average, look at the next bar. It opened higher. So it automatically sent a new order to go long again. And that's why we have that blue signal right there. So the strategy is doing precisely what we told it to do. Now, let's go ahead and format the strategy and go to the inputs of the strategy. I'm going to click on customize. And these are the two inputs that we created, average length, which I'm not going to touch right now, and the average mode. If I were to turn this into a 2, then let me click OK and close. Then you can see the same trade that we talked about appears right here. We have a long trade, a selling transaction, and then an automatic buy again. But we don't have any more trades. Take a look at something interesting. You see right here where the candlestick closed below the moving average? It didn't generate a selling transaction. The reason for that is because it's using 2 as the moving average mode, which is our exponential moving average. If I were to bring in, I'm going to add a study here, and this time I'm going to use a exponential. Here it is, moving average exponential. I'm going to click OK, and I'm going to turn that to 30 also. Let me see what the color of this is. This is going to be red, and the style, let's just make it a little bit thicker. In fact, let's go ahead and change the color so it doesn't, let me turn this yellow. All right, so we have a different moving average here, and I want you guys to take a look at what happened here. So you can see that, in fact, let me zoom in because it's hard to see. Let me go ahead and click on the magnifying glass and zoom in this area right here. So the cyan line is my simple moving average, and we can see that this red candle closed below the cyan, but it didn't quite close below the exponential moving average. Exponential moving averages have this characteristic that they're a little bit more sensitive to price movements. So in this little dip, we had back-to-back, red or down candles. The yellow line kind of, moved lower a little bit faster than our cyan because that's expected from an exponential moving average. Didn't quite meet that condition of crossing over, so it didn't sell my long trade. you can already see the differences here, right? Let's go ahead and zoom out one more time. And let's go ahead and format the strategy again. And I'm going to use a number 3. This is weighted. On a weighted moving average, I want you guys to see what happened. First of all, the selling transaction is on a different bar. I'm not sure if you guys remember, but when we had this dip under the moving averages, the selling transaction was up here, which was a better selling transaction than what this is giving us, which is okay because we want to be able to compare moving averages. And we already see that using a weighted moving average doesn't do well for this single trade. I'm not saying that it doesn't do well for the whole strategy, but you can see that it changed my entry and exit. And it wasn't until, this bar that it was able to enter again. And it did hit our selling transaction over here. Let me see if we have an exponential moving average that I can add here. Not an exponential, a weighted. So it's moving average weighted right here. All right, let's go ahead and turn this kind of pink, hot pink. The style is going to be a little bit thicker, and the inputs, I'm going to turn this to 30. All right, so that's our weighted moving average. You can see that it's very similar to the other moving averages. They're not really far away from the calculation because they're all still moving averages, but there's slight fluctuations based on the way that it's calculated. Weighted and exponential moving averages, we know that they give more weight to more recent data. So they're going to be a little bit more sensitive to what's happening right now. But you can see that this purple line, the magenta line, is what the strategy is using as a benchmark to enter and exit the market. So let me get to what I wanted to show you, which is doing a strategy performance report on the strategy and then running optimization on it to see which moving average would have been better. So this is a strategy that is applied to 5 years of data, I believe. Let me go and check my historical data range. It does say 5 years. I'm going to click OK, and I'm going to check the strategy performance report. You can see the equity curve line is all over the place. Not a good performance. Although it's a profitable strategy, we have a profit here just by looking at, the performance. It doesn't work well. Yeah, we ended up at a positive, but notice what happened throughout the 5 years. It went up to 8,000, it went down to 2,000, it went up to 10,000, it went down to 0, and then it went up to 6,000. So not a good performance, even though we are on the profitable side. But the question here is, which moving average would have worked better, So let's go ahead and take a look. I'm going to go and format the strategy, customize it, and I'm going to grab this average mode, and I'm going to optimize it. And I can tell the optimization process to test from 1 to 3 in increments of 1. So it is going to use those numbers, and you already see that it's going to change the calculation parameters of my strategy, because when it starts using 1, it's going to use simple, it's going to shift to 2, and it's going to test exponential, and when it switches to 3, it's going to test weighted, and it's going to automatically give me a report based on these numbers. I'm going to click OK, OK, and this is just 3 tests, very simple optimization. I'm going to optimize this, and as quickly as that, I have my results in. And what did the strategy pick? Let's go ahead and see. I'm going to go to the strategy optimization report. Let me make the font here bigger. Let's go here to format, customize window. Let's make the data a 12. In here, we can see that the one that generated the best result, this is test number 2, using a 2 as the moving average. So it wasn't the simple moving average. It wasn't the weighted moving average. It was the exponential moving average that provided the best results, at least for Microsoft. Remember that the performance is going to change based on the security that you apply. But this is a good exercise for us to determine what works best for my strategy. Is it to use an exponential moving average, a simple moving average, or a weighted? But you can see the differences here. For example, you see the total number of trades, the percent of profitability. You see numbers like consecutive winners, consecutive losers. Yeah, you can already see that our weighted moving average had less consecutive losing trades. Anybody can give up on a strategy after a certain number of losing trades, but these strategy back tests had a high number of consecutive losing trades. The one that had the least was the weighted moving average with 7. But having to sit through trades or 7 unique trades that are losing is tough to handle. And I'm not sure if you guys have the tolerance to do that, but every trader has a different tolerance when it comes to losing trades, but it does start, working your mind, and you start doubting your strategy. Is this a strategy that I want to stick with? So going back to what we did and why we did it, we created a switch inside of a strategy that allows us to, as the name implies, switch the calculation mode through different behaviors. In this example, we switched from simple moving average, exponential, and weighted, and that gives us the ability, to optimize the strategy and test these modes to see which one works best. So interesting. And if anybody has any questions, the chat is open. I didn't say this at the beginning, but I guess it's kind of implied. We do this every single week. You're welcome to ask questions if you need to. Let me go ahead and close this out. Let me go back to my PowerPoint, multiple confirming conditions. So not all conditions line up on the same bar, meaning that if you're looking for a moving average crossover, but at the same time, you're looking for a stochastics crossover and you want those to be bullish, it's really difficult to align the signal on the same bar. Let's say, for example, you're looking for, again, moving average cross with a stochastic cross. If the moving average crosses, then turn your variable to true so that when the stochastic crosses, you still have a bullish mode on the moving average because you've turned that flag to true. That's the type of study that we're going to create now. And if you look at the example that's here, notice that this uses RSI and it uses DMI. The top one, yes. If the value crosses above RSI, oversold, then begin. And you have an RSI bull flag and you have an RSI bear flag that are true or false. And then you have the DMI over here. So if it crosses above DMI minus, then the DMI bull is true. But this is where you have the confirming conditions. If the RSI is bull and the DMI bull, then I'm going to buy next bar at market, that type of thing, So confirming conditions. Let's go ahead and take a look at, we're going to write a code and see if we can make it into a strategy. Let me pull up my editor. Let me go here to new strategy. We are going to take a look at moving average and RSI. And we're going to do the following. So I'm going to do at MC. This is RSI, MOV, AVG. So I'm using RSI and the moving average for this particular strategy, okay? So let me go ahead and click OK. And the first thing that I'm going to do is create my inputs. All right, the first thing is going to be the average length, which I'm going to be using in the moving average. I'm going to turn this into a 30. Then I'm going to use the RSI length, and I'm going to start this off at 14, which is the standard calculation for the RSI. I'm also going to do an RSI bull level. I'm not going to use the RSI overbought and oversold just because I'm going to use the RSI concept a little bit different. any RSI value that it's above a certain level, I'm going to call that bullish. So I'm going to, that level, the bull level is going to be set at 60, which is much lower than the overbought level. But if the RSI indicator is crossing over 60, I'm going to interpret that as a bullish signal because it has potential to continue up and reach that overbought level. So that's the idea and how we're going to write this strategy, okay? And my variables are going to be the following: MOV, AVG, similar to the one we created for the first strategy. We're going to do my RSI, which is also numeric. I'm doing my RSI because if I just type in RSI, EasyLanguage turns it magenta because it recognizes it as a function. So many times when that happens, I just add my RSI because it's kind of my own variable, okay? We're going to do MA bull, and we're going to turn that into a true-false variable. These are the flags that we've talked about that you can build into a strategy so that if they're true or false, you know, they can put in a trade. And we're going to do the RSI bull, and we're going to initialize that to false. I think I had done this strategy a long time ago, and we're going to just leave it at that for now. So let's go ahead and calculate our variables. My moving average is going to be equal to the average of the close for average length. And my RSI is going to be equal to the RSI function of the close for the RSI length. All right, does that make sense? And so we're just assigning the calculation to each of our variables. So this is what's going to happen. If the close, similar to the previous strategy, if the close crosses over moving average, then, and this is where we turn the flag on, MA bull equals true. Does that make sense? So we're just turning a flag true. It started off as false, but if the condition is true, then we're turning it to true. And then we do the other one, which is the RSI. If RSI crosses, see, I forgot that I'm not going to use the function here. I'm going to use my RSI. If my RSI crosses over my RSI bull level, which is up here, and we're starting it off at 60, then RSI bull equals true. So we turned on the two flags. As long as the two conditions are true, then we have confirming conditions across two technical indicators. The order actions are simple. If MA bull and RSI bull, then buy next bar at market. All right, let me verify this. It verifies well. I only have one order action, but I'm going to take a look at how that trade appears on the chart. Let me go here to TradeStation and confirm. Let me go ahead and remove my weighted moving average, my exponential moving average, and the strategy that I put in there earlier. And I'm going to add the RSI because I'm going to be using the RSI as the confirming study. So RSI, here, RSI. Default calculation, I'm going to click OK. But I did say that I wanted to use the calculation of the RSI a little bit differently. We're looking at the RSI to spot bullish modes, not overbought and oversold levels. So I'm going to go in the settings of the RSI, and I'm going to set the overbought to 60 instead of 70. For the oversold, I can turn it to 60 as well, so that I just concentrate on one single line. And when I click OK, this is what it looks like. But you can see that my condition is that when the RSI is above 60, which is that green line, I'm in a RSI bullish mode. And if I've had a crossover to the upside on the moving average, I'm going to take that trade. Now, let me go ahead and add the strategy and see if we can analyze the trade further. This is at MC, RSI moving average. I'm going to click OK. And you can see that nothing happens on the chart, but if I scroll to the very back of the historical data, you can see the trade happening right there. Now, I want you to take a look at what happened here. Let me go ahead and zoom in a little bit. I'm going to zoom in this area. Maybe I zoomed in too much because I want to see the moving average crossover. Yeah, it happened along many bars back. All right. So take a look. This is the candle. Well, this is the candle. This also closed below the moving average. So this would have triggered, the entry, the long entry. And it didn't generate the long entry. Why? Because the RSI was not above 60. And it met the condition right here one more time where it said, okay, I crossed under the moving average and now I'm crossing above. This would have triggered the long entry as well. Why didn't it trade the long entry? Because the RSI was not confirming the trade. It was not until the RSI crossed over that 60 threshold that the strategy was able to put in my trade. It didn't need, the crossover to happen on this bar because we turned the flag on. It was at this level that we said, okay, the MA bull, the moving average bull, is true, and it stays true until we reset it, until we turn it false. So let's go ahead and include some selling transactions on the strategy so that we can play a little bit more with this strategy. All right, so let's go ahead and do a selling transaction. My selling transaction is going to be a cross under. So if close crosses under MOV AVG, then sell next bar at market. All right, let me verify this. Okay, let's go back to the chart. Let me reset the chart. Now, so we entered that trade and then we sold it right here. Let me zoom in. Okay, so we were in a long trade. It crossed under the moving average, so it generated a selling transaction. And then it crossed above, and then it generated a long trade. The price activity crossed under the moving average again, so we have a selling transaction. But you guys notice this buy trade? This buy trade happened without having a crossover. Why is that? The reason for that is because we didn't reset the flags. On the very first trade of the strategy, the two flags are turned true. So you need to have a mechanism inside your strategy that says, okay, once you've turned them true and this has happened, then turn them off again so that we can wait until the conditions are true again in order to take that trade. This is why you're going to see some trades that do not respect the conditions because you didn't reset the flags. Let me see if I can find another example. Let me scroll here to the right. All right. Again, here, you see where the long trade is happening below the moving average? That should not happen because we're waiting for the crossover. So in a strategy like this, it's important that we reset the flags to false so we don't get these false signals. I'm going to go over here to the strategy and show you something we can do. For strategies, we can look at the position. If we have an open position, then we can turn the flags off. So if market position, this is a strategy word that exists in the code. Notice that it turns blue. Market position returns a number, just to clarify for those that don't know market position. And when you use it in EasyLanguage, it knows what position you have open. If it's long, if it's short, or if you're flat, if you don't have anything. For those three modes, you have a specific number: 1 for long, -1 for short, and 0 for flat. So if market position does not equal 0, notice the way that I'm using the does not equal 0, then begin. The two actions are MA bull equals false and RSI bull equals false. And then we end here. So this way, we're turning those positions or those modes or those flags, I'm sorry, to false anytime we have an open position. Let me verify this and then go back to my strategy. So here you can see how the strategy now stays true to our confirming criteria because we're resetting the flags to false. So something that you have to keep in mind, because the verification process is not going to catch errors like that. This is something that is wrong with the syntax of your code in terms of calculation. So that's on us to determine why is a strategy not behaving a certain way. So now all my blue arrows should be above the blue line because that's what the condition said. We're waiting for that crossover to the top side. So we see that we have fewer trades than we had before. Now we want to take a look at the strategy performance report. This is our report. Let's go ahead and look at the trade graph. Again, not a pretty equity curve line, is all over the place. So it's not a strategy that I would feel confident in trading. But, the idea here is just to show you that functionality where you can have these input switches or variable flags that turn pieces of the code on and off. All right, this is the end of my class. Thank you so much for joining me today. I hope that you guys find something useful here, but I just want to say thank you for your time. Have a wonderful afternoon, and I'll see you again in my next class. Goodbye, everyone.